Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Facebook. Is Facebook still a buy with the weight of the controversies it's going through right now and their plans on becoming the Metaverse? Well, let's find out together. I'm just going to briefly go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both the short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you'd like to hear daily stock reviews and recommendations from an unbiased source. So let's get right into it. So Facebook basically develops products that enable people to connect and share with family and friends, like my Facebook page right here, through mobile devices, personal computers, virtual reality headsets, and in-home devices worldwide. So let's go ahead and look at some of the news of the company right now. Everybody knows what Facebook is. So Facebook just announced that it plans to rebrand the company with a new name. What? So Mark Zuckerberg wants to be known for building the Metaverse. You heard it here. Maybe that's the store, all the data he's collecting on us and that big head of his, but who knows? But in other Facebook news regarding the controversies, the company is still contending with the fallout from the former employee Frances Hagen's leak of thousands of pages of documents to the Wall Street Journal and 60 Minutes on October 5th. Hagen testified before Congress about the leaks and urged lawmakers to rein in the social network. She is now scheduled to testify before the British Parliament on October 25th. Forget about her. Now, the documents contained internal studies and discussions related to Facebook, Instagram's inability to address issues ranging from Instagram's impact on the mental health of teen girls and to human trafficking and hate speech on Facebook, which is really important that they need to control hate speech and trafficking and all that and what's going on. They need to have better controls in place, and I agree with that. Now, Facebook has downplayed the leaks by saying the documents were taken out of context earlier in the month. Facebook VP of Content Policy Monica Burkert told Yahoo Finance that the documents had been miscategorized, pointing to a survey showing that when teen girls felt bad about their bodies, Instagram made them feel worse. Now, the stolen documents contained what is not peer-reviewed research article, but was instead a survey of a small number, and she thinks around 40 Instagram users who were teens who were already struggling with mental health issues, she said. But it's still a problem, and she can't just hide it and put a cloud around it. Now, angel investor Shalil Sahil Bloom said Facebook plan the facelift won't work. The product is no longer as compelling or engaging as some of the other platforms, he says, especially for the younger people. Bloom said Facebook is trying to create something that is more forward-looking, he added. Now, the audience is shifting from the centralization of Web 2.0 to decentralized Web 3.0, which could hurt Facebook if they're unable to capture the momentum, Bloom stated. But what do you think about that statement? I think I read a few comments months ago about being a boomer. Is Facebook for boomers, like what Sahil Bloom is saying? Or is it still for everybody? Please leave your comment down below. I'd love to hear your thoughts on it. But, you know, going over the news, let's basically look at the fundamentals of the company right now. So looking at the fundamentals, now the current stock price right now is trading at around $341 a share. Definitely had a boost recently, but a sharp decline from $380 a share. The current market capitalization is roughly around $961 billion, which is a really huge company, I would say. Now, the 2020 revenues were $85.96 billion, with about $29 billion in earnings. The estimated revenues for 2021 will be roughly $119 billion, with earnings around $40 billion. Now, earnings grew about 65% over the past year, and earnings are forecasted to grow about 14 to 15% per year over the next two to 3 years. Now, let's look at some evaluation and models that's out there. Because Facebook is an interactive media service industry and has positive earnings, the PEG, the PE, and the price-to-book ratios are the most appropriate valuation measures. Now, the price-to-sales ratio is less instructive than the PEG or PE since the company has positive earnings. Therefore, Facebook seems inexpensive with a PEG value of 0.88 times, below the industry median of 2.49 times, which is supported by a PE ratio of 25 times. That is also below the industry median of 35 times. So Facebook is a good value based on its PE ratio. Now, looking at the profitability analysis, it's one of the more profitable companies in the industry with a net margin of 37%. Its operating margin and net margin are among the strongest of any peer, while its gross margin is above the industry median. Now, looking at the growth rates analysis, we got to know exactly where it's gonna go. Earnings growth on Facebook outpaced revenue growth over the trailing 12 months. Now, this is a trend that is not sustainable if profits are to continue to grow at this rate. However, this result was better than the average company in the industry. Now looking at the financial strength analysis, it holds a substantial amount of cash and cash equivalents on its balance sheet. The liquid assets can be used to fuel growth, pay dividends, and limit financial risk. It is also important to note that insiders over the past year have been selling Facebook shares and not buying. So they've been taking their profits over the past year. So let's see what the analysts say about this. Now, the analysts say it's a strong buy with an average price target of 12 months of $422 a share, with a high of $500 and a low of $300 a share. Let me bring it back over here. Now, going over a few of the analyst reports. Now, the Street Quant Ratings recommend a buy. Now, this is based on their conversion of positive investment measures, which should help this stock outperform the majority of stocks that they rate. Now, the company's strengths can be seen in a multitude of areas, such as robust revenue growth, largely solid financial position with reasonable debt levels by most measures, notably return on equity, reasonable valuation levels, an impressive record of earnings per share growth. Now, they did say this: although the company may harbor some minor weaknesses, they feel that they're unlikely to have significant impact on the results. So what they're saying, the minor weaknesses, is all these controversies, but I'm going to get into that in my thoughts later on. Now, the Ford Equity Research Team recommendation is a hold recommendation on Facebook. That is a result of their systematic analysis of the three basic characteristics that they review: the earning strength, the relative valuation, and recent stock price movement. Now, they say the company has generated a negative trend in earnings per share over the past 5 quarters. However, while recent estimates for the company have been mixed, but mostly on the up and up, Facebook has posted better than expected results. Yeah, they have posted it. So it had mixed, people were like mixed about it, but it's definitely been on the uptrend. Some share prices over the next year indicates Facebook will perform well over the near term. Okay, so based on all of that, am I a buy, hold, or sell recommendation on Facebook? Here are my thoughts. Now, right now, Facebook brand is suffering partly because of how it's handling the ongoing controversies. Some of the short-term moving averages do show that selling pressure may continue, but it may or may not. Ultimately, we have to know that it's a for-profit company and it's putting profits first, but it also has to put social responsibility while doing business. And I believe that's where it's hurting its brand right now. I believe it shouldn't go to the extremes, but there needs to be more controls in place to protect users. I'm not saying the quail speech, by no means. I'm saying more controlled monitoring of posts, maybe even classifying political posts with a frame that says this is political in nature, but that's just a random thought that just came out of my head right now. Now, I do believe that Facebook will overcome these controversies and succeed in the end, but what that end looks like is left to our imagination. Now, let's see what's the possible Facebook replacement in the future. Let's say another social media giant comes along. Well, do you remember what Google did? They tried to do that. They tried to replace Facebook. They failed miserably at creating the next Facebook years ago. I see this platform as a way for almost every American to put their memories on a timeline for all their family and friends, and for them to change platforms with all of those memories will be difficult to do. Now, the tentacles of this company grab onto the consumer in such a way that the user doesn't want to delete their account, and it's a way to track their lives. Plus, there's Facebook Messenger that I'm guilty of using on a frequent basis, and I'm sure there's other video apps out there that I could use, but it's just, it rings to all my devices, and it's just easy, so I just use it a lot. But that's just my opinion. Now, based upon all that, I am a strong buy on Facebook with a target price of roughly around $425 a share over the next 12 months. If you're a short-term investor out there, I see a lot of short-term volatility and those moves. It's definitely going to be shaking and moving over the next year, and you can make money on those swings. But let's briefly go over some downside risks to my bullish opinion on the future of Facebook. If for some reason users find another platform and convince all of their friends and families to use, then there's a possibility of a slow company decay. But I do not see any signs of that at the moment. Now, also, if Facebook decides not to be socially responsible and more controversies come forward because Facebook putting profits first, then there's a potential for advertisers to pull away, people not to be using the platform as much as they do. But I have not seen that either in anything I've been looking at. But what are your thoughts? Do you think this media giant can overcome and succeed over the next few years? Or do you think it's going to become the boomer social media app that some people are saying? Please leave your comments down below. So there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribe and hit that notification bell if you like to hear daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks, ciao.